Welcome to the Journal podcast from the Chartered Insurance Institute, a place for thought-provoking discussion from the world of insurance and beyond. On this podcast, I'm talking once again with Francis de Zulueta and Robbie Lyle from the Commonwealth Insurance Forum. Today, we're going to focus on bridging the protection gap in Commonwealth countries. Thank you for joining me today, Francis and Robbie.
Thank you very much.
Now, before we begin, we spoke in the summer. It was episode 190 of the Journal podcast, if listeners want to go back and have a listen. It's probably a good idea if you could give me some of your highlights from the work of the CIF over the autumn period as a sort of introduction to what we're going to be talking about today. So, Francis, what have you been working on?
Yes, well, just to remind everybody of our sort of menu of activity, that includes the areas, obviously, insurance related to sustainability, natural disaster risks, climate change risks, distribution strategies at all levels of risk, governance, law, IT, innovation, youth engagement, education, training, connectivity with other professionals such as law, accounting, claims management, payment systems, and any other areas of insurance in all classes of liability protection. So it's a pretty broad scope, basically. In essence, what CIF is designed to do is to raise the insurance profile as a topic within the Commonwealth of Nations, who, as you will probably all know, contain 56 countries and about 2.45 billion people. So it's significant.
It's a really rich set of activities that you focus on. And we're going to be coming on to those natural disaster risks in particular as the focus for this session. What are some of the highlights from the autumn for you, Francis? Have you been talking to particular individuals on activities and had some traction?
Yes. Well, we've been developing the insurance strategies with the Commonwealth Secretariat at Marlborough House in London, which is, as you can imagine, quite a long process. But hitherto, there hasn't really been one when it comes to insurance. And it's only because of CIF's involvement and encouragement to the CII to join the Commonwealth. And as you know, the CII is now officially a member of the Commonwealth. And that's a marvellous thing because the whole subject of insurance and all the various things I've already mentioned simply weren't there. But they've now picked this up. And we've also been talking more to the Commonwealth Enterprise and Investment Council, which is effectively the business end of the Commonwealth, and particularly with Lord Marland, who runs that bit and is very active indeed and very supportive. Fortunately, he has an insurance background himself, so he does understand, he does get it, and he does realise that the topic of insurance is something that is critical, really, to pretty well everything, backing up finance, backing up aid activities, backing up all sorts of things. So that work continues, and developing programs for export credit, all the rest of it, which Robbie is very heavily involved in. And we're looking towards forming a global Commonwealth export credit type operation in due course, which could be very, very handy indeed. So there's been a lot of activity in all of these areas. And Robbie, you might like to perhaps just add a couple of words on that.
Well, thank you very much, Francis. We've been now developing a particular trade program with the Commonwealth, with a major international bank, because this is something which is missing at the moment as a part of the Commonwealth family growth areas in trade and in politics, for that matter. And so we are almost able to announce something in the next couple of weeks, in fact. I'm waiting for some people to return from COP30 before we can do that. But it will be a significant step to make sure the small states and smaller and developing states have the same opportunity to trade their goods and encourage investment into their own countries using their own decision-making.
I mean, that's fantastic. And this was the major focus of our conversation back in the summer, wasn't it, Robbie? It feels like all those conversations and the hard work that you and Francis have put in over the last couple of years are beginning to bear fruit.
Thank you very much for saying that. We have been incredibly encouraged by all the trade ministers of the Commonwealth, and also in particular with the help given to us by the British Foreign, Commonwealth and Overseas Development Office, who have provided an enormous amount of help particular in helping us understand certain economic statistics, which has actually helped us enormously.
I mean, that's incredibly positive. And I guess from the CIF's perspective, you're always welcoming of individuals coming to you with ideas and suggestions, and also that beneficial opportunity to provide expertise to carry through on some of these proposal activities. So I suppose it's an open offer, isn't it, to get involved?
It is indeed. And where there is no program, we can certainly help find that program, and actually, particularly with the help of the Chartered Insurance Institute, because it's really important that when we open up these programs, we have people with professional degrees with them to help them understand more fully the international regulations which are required to be understood.
Indeed. So if there are any members of the CII listening who feel as if they could bring some expertise and weight to the activities of the CIF, please do get in touch and we'll make sure that we can get you connected with both Robbie and Francis. Thanks so much for that brief update. We're going to move on to talking about the natural disasters, and one of the smorgasbord of areas that Francis mentioned earlier that is the focus of the CIF's work. And in particular, the very sad developments over in the Caribbean in recent weeks with Hurricane Melissa, which caused devastating damage to Jamaica and some of the other countries in the region. I mean, the damages are estimated at something between $2 and $5 billion. I think one of the challenges that we've observed is that only a very small percentage of the private properties over in Jamaica were actually insured. And it really speaks to the protection gap that continues to exist in countries around the world. What do you make of the challenges that Jamaica is now facing in the wake of this, Robbie? I mean, is it something that you were surprised that the protection gap was that small? Probably not.
Well, I'm not surprised, and I'll come to that in a moment. And it is not the fault of Jamaica or any small state at all, because I will be able to offer a very interesting statistic by donor nations in Europe and what their protection gap is. But can I just also add that actually, unfortunately, in Jamaica, the full damage cost is now recognized to be $8 billion, which is huge, of which 3.76 billion is residential damage, non-residential is 1.8 billion, infrastructure is 2.9 billion, and agricultural damage is 389 million, which is an extraordinary amount of damage. And 63% of that damage took place in 3 actual parish communities, which is very devastating for those people in particular. So how do they recover, and how do they receive funding to help them? Well, as you know, the Caribbean Catastrophe Risk Insurance Facility, which was founded in 2007, and Jamaica was one of the early members. They, within 14 days of the Melissa hurricane affecting Jamaica, they paid out $70.8 million, which was it was the highest amount of money CCIS has ever had to give in one particular moment. We are still waiting to understand what payments will come from the excess rainfall payments. And this will actually, fun enough, CCIF, it's their 4th payment since 2007 to Jamaica. They've paid out altogether just over $100 million, partly because of Beryl, where they paid $26 million, and then there was Zeta and Eta. Now, that is a very interesting amount, because obviously it doesn't sound at all enough to cover the amount of damage. And indeed, Jamaican government itself is lending to their own energy program $150 million to get the country grid up and running again. So there's a huge shortfall, and that sounds horrific, and it is horrific, and it entirely depends on how a government is able to rebuild, reconstruct, not only housing, but also the road infrastructure to get to them. Now, that sounds a hopeless amount of money to find. But what is interesting is the actual low insurance penetration of many countries around the world. And I would like to actually give some statistics here, because the country with the most insurance penetration is actually the United Kingdom, which is 22%. And that is because we've had such a long-established insurance market run essentially by Lloyd's of London. The second one is Switzerland, which has a huge insurance penetration, but still lacks 26%. And they began their program in 1936 on a cantonal basis, whereby every house has to be insured. And the canton insurers then collect money from a fund which is regulated by all the insurance companies in Switzerland and actually covers 95% of all natural disaster damage, which is totally amazing. But then you have Australia, which has 33% not covered. You have Canada, 37% of their insurance damage is not covered. America, 43%. And now what is interesting is even though France has its own program to cover payments by insurance companies for natural disasters, which is held by the government, 46% of France is only covered for this kind of insurance.
Absolutely astonishing. I mean, I am surprised as a naive commentator in these areas, Robbie, that those rates in the most developed countries around the world remain so low.
Well, which is absolutely extraordinary because Germany does not have a nationwide natural disaster fund, but they are now thinking they must have it because they're now being inundated by problems with flooding from all their major rivers. And it transpires that Germany has relied entirely on the private market, and only something like 57% of all natural disasters are covered by insurance, which is extraordinary. And then Italy, 78% of all assets are not covered. And so, in fact, the Italian government has only recently, last year, started through SACE, which is better known around the world for export credit trade insurance. They are bringing in a program to insure, in particular, SMEs, so they are not hit and made totally bankrupt by a natural disaster. Now, why do I mention those figures? You would then look back on the Caribbean, and actually, the Caribbean is not doing too badly compared by all these major donor nations. They do not have as much cover as you think for their insurance risk when it comes to a natural disaster.
So building on that then, Robbie, if we're saying that these countries are exposed to the degree that they are, and Jamaica has found itself in a precarious position this time around, do you think authorities are going to be revisiting catastrophe models and accumulation strategies as a result of what they've seen happen to a country that, has a relatively low insurance penetration rate? But in actual fact, they're looking at their own countries and saying, well, we're not actually that much different.
Well, you're absolutely right. In fact, the French PCR program, where they do 100% reinsurance for their natural disaster risk covered by the private market, they suddenly discovered in their overseas territories, only 22% of all assets were covered. So they have now expanded the program, which is very interesting because there we have a totally mature economy suddenly realizing they have areas which are not at all covered properly. And so it then comes to the point, when you pay out, what are you paying out for? Because we're having a huge expanse of the population, which I'm sure Francis will come to quite soon in his comments. But we have to make sure when we start building bigger urban areas, even megacities, that we have the right roads to allow rescue and recovery vehicles to immediately go to those areas where there is a disaster. And that has to be brought into the whole equation. And that is why every kind of program for disaster reduction has to be, I think, a joint venture between the private insurance market and government insurance. And that's where first loss insurance programs come in so usefully. I suppose the answer is play the ILS game, the insurance mechanisms, whereby we can then encourage people not in the insurance market to participate and invest in future risk results, where they could make quite a significant profit, but at the same time give a much better economic basis for a government to rescue their own economies.
Very good. Well, Francis, I'm going to come to you in a second about the CIF's mission about fostering knowledge exchange and best practices in this space, because Robbie's neatly drawn us towards that area. But before we do, I just want to ask one more question about the parametric insurance product that the Jamaican government put in place, Robbie, that you mentioned there. I mean, actually, irrespective of the fact that the size of those funds that have been paid, we might look at and say, well, they're relatively small in the grand scheme of things. The fact that that policy has been put in place and has been demonstrated to have efficacy in the face of Hurricane Melissa, that's an incredibly positive thing, isn't it?
It is extremely positive. And actually, it is almost similar to an actual insurance slip in the London market. You need to have a professional body writing the first line, and other underwriters will take comfort because they will know that particular underwriting company or syndicate in the Lloyd's market actually knows the product they are insuring, and they will follow their line. And the same thing with CCIF or the Prevention Africa ARC or EDRIF in Southeast Asia. You have the ability to suddenly say, if you're a World Bank member on the donor nation program, oh, we know these people are handling it very well. We can then put in so many more billions or whatever is necessary because we know it's going to be distributed fairly, because that government and the private market understand how to distribute funds after a disaster.
So that sharing of knowledge is incredibly important, isn't it? And emphasizes the necessity of bringing expertise together, which is, as you've said, Robbie and Francis, is one of the CIF's fundamental missions. I wonder, Francis, whether you could talk us through some of the points that Robbie picked up there, and perhaps some of the others in relation to infrastructure, both physical infrastructure. We were talking there about having the right roads in place to ensure that disaster recovery activities can be put in place. Certainly as populations are expanding and large towns and cities are growing. But also there's the digital infrastructure as well, and making sure that we have the right digital platforms in place to bridge the protection gap in rural and low-income countries. I wonder if you could offer us your thoughts on both of those, please.
Yes, of course, Chris. I mean, as we mentioned earlier on, this is, of course, a huge subject, and there's a lot of data on it. And I, for this particular podcast, am leaning quite heavily on the insurability protection gap document produced by the IDF, Insurance Development Forum, relatively recently, which is a very good analytical document, which covers all sorts of stuff that we've already vaguely touched on or in detail touched on. I mean, starting with the overview, really, of global population growth. I haven't got the precise statistics in front of me, but I'm sure anybody can look them up and see that, let's say, over the last 75 years of human existence that we've got anyway, the data is showing an absolutely enormous increase of 2 to 3 billion 75 years ago on the planet, 8 or 9 billion. It's just gone through the roof, literally gone through the roof. And you have to ask why that is. Why is that? Well, people say it's urbanization, but of course that's a consequence. It's not a cause. Mm-hmm. And the cause, most of these countries, certainly developing countries and indeed medium developed countries, though the population is going through the roof, have still got what I would call a Dickensian model, i.e. you have as many children as possible on the basis that most of them will not survive. I mean, that's the theory that, of course, not that long ago used to apply in England too. But given the amount of drugs available now, anti-malarial and all the other things we can all think of, that has been increasingly reduced. So out of your 10 children, instead of 2 surviving, 8 are surviving and going on to have more and more children. So we have a sort of cumulative explosion. That, of course, is leading to urbanization, or it doesn't have to. And as Robbie pointed out quite correctly, urbanization is not a given because of AI and for the ability to work remotely. But nevertheless, it's still a trend at the moment, and we've seen that sort of thing going on all over the place. I've got some figures here. The transition to urban living has happened pretty swiftly. In 1980, 39% of the global population lived in cities, the majority in high-income countries. By 2030, around 60% of the world's population is forecast to live in cities. Delhi surpassing Tokyo as the world's largest city. There were 371 cities in the year 2000 with a population of 1 million or more. And by 2018, the number of cities with at least 1 million inhabitants had grown to 548. And in 2030, a projected 706 cities will have at least 1 million residents.
I mean, this concentration of individuals in urban centres then is creating a necessary focus for insurers as well, isn't it? In order to make sure that they're able to respond to the evolving challenges brought about, as you quite rightly say, through advances in healthcare and growing birth rates.
Yes.
And in that particular situation then, if you are faced with a rich set of data, as you've described, Francis, where we've seen the trend, we've seen the concentration, we can extrapolate through to the future. We know that the risks are going to go in one direction, at least in the medium term. I mean, the long term is more of a challenge for any of us to speculate about. In the medium term, we can anticipate that there is going to be further growth in urban centres. So that interrelationship between urbanization, concentrations of populations, and very low and stagnant protection gaps, that's a major concern, isn't it?
Well, yes, it is. I mean, the analysis of the current global protection gap is, I mean, who knows, but a figure that's being produced anyway is 180 billion per annum. But of course, given the very interesting statistics that Robbie's dug out on the lack of protection in many developed, let alone developing countries, that figure is probably a massive underestimate of what could be coming in the future. I mean, flood risk in the UK alone is going through the roof. And you may or may not have seen an article this week, actually, in the Telegraph, doing an analysis of the cut in funding that the British government is able to offer for flood defences, just in the UK, let alone the rest of the world. So, I mean, this protection gap is growing. And of course, a lot of this urbanisation is built in unsuitable places or in low-lying countries like Bangladesh or whatever it happens to be. It's also meaning that a lot of areas are being concreted over or whatever, which of course reduces water evaporation and disintegration, or however else you like to describe it. So the consequences are obvious with all of this, and this is a compound problem. The causes and challenges we've got are numerous, and resilience generally, obviously, and I'm talking globally here. Finance available, planning. Of course, a lot of countries have totally different planning approaches. A huge amount of the world has no approach at all and relies on informal, what you can get away with stuff, which has its own consequences. We've talked about urbanization. Obviously, that leads to environmental degradation. Naturally, it's got to. We see that all over the place. For insurers, one of the biggest problems insurers have always got in new countries and new products is the available data. And I had this issue with, and I won't mention names, obviously, with a certain insurer in the London market not that long ago. And we were trying to get a micro insurance program going in an Asian country. And the micro insurance program was to be delivered via mobile phone contracts. That's the way to do it. So you've just added a few more pence or dollars or whatever it was to the contract. And that gave you a small limit, $100 or something like that, of micro insurance attached to that. And that was a very good distribution strategy. And we needed some insurance for it, obviously, somebody. And the insurer wanted the data. We haven't got the data because we haven't launched the program. We can't launch the program without the insurance. So they say, well, we're sorry, but we can't insure it unless you give us triangulated figures for the last 3 years. We say, well, they don't exist. I think part of the problem we've got with the modern market anyway is that you could say the over-reliance on data in some cases is extreme. I understand it, and I understand the reasons for it because of the professionalization of capital. However, it has also led to this sort of dichotomy where new ideas that do require genuine risk-taking can't be taken because you haven't got the data to support the product. So it's an issue.
So in this circumstance then, Francis, and coming back to one of the points that Robbie was making earlier about the importance of joint ventures between government and private sector, is it the case then that governments should act as insurers in these sorts of situations? Should they be facing or encouraged to face into the types of opportunities that you've described there and give their support in these situations in order that we can create a market that does work more effectively than perhaps at this point in time?
Well, if I may, I'll just touch on 3 examples of the sort of thing we're talking about and the bigger picture. So, I mean, there are a few case studies in here. In 2022, the Lagos state government, supported by the World Bank and the United Kingdom's Foreign and Commonwealth Office, launched an open geospatial data initiative covering 1,200 urban flood zones. The resulting hydrological data set allowed insurers to model risk accurately, reducing technical premiums by 25% and enabling the city's first parametric flood policy covering 25,000 households. This initiative demonstrates how investments in open data directly increases insurability in urban infrastructure. So that's one example. There's another example, a weather-related index microinsurance for smallholder farmers in Kenya, where Kenya's mobile-based rainfall index insurance delivered by Acre Africa and Pula was supported by Safricon and the World Bank, funded agricultural risk facility, which has now insured over 1.3 million farmers since 2021 at an average premium of $3 to $5 per season. Payouts, and this is the great thing about parametrics, are automatically triggered via an M-Pesa, i.e. when rainfall thresholds calibrated using TAMSAT datasets are breached. So there's no, it's either breached or it isn't breached, and you get a payout or you don't. So it's the speed of delivery of money via parametrics that's such a crucial difference between normal indemnity products, which of course can take months, sometimes years to pay out, which is too late. Anyway, that is incredibly helpful, and sustaining this program will require a multi-year donor support program, and that of course will be from people like the World Bank and governmental agencies. There are group and community policies, very important, and this has been mentioned to me on several occasions, that you really need to get into the grassroots of local groups and local communities to encourage microinsurance type conversations. There's all sorts of usage-based on-demand motor, for example, pay-as-you-drive motor insurance, parametric products for risks like rainfall, cyclones, floods, earthquakes, and with payment triggers that pay promptly without loss adjustments. And then just flipping on, there's another third example before I move on to the bigger picture. In 2023, the UN and the Pacific community of Vanuatu piloted a climate resilience premium subsidy scheme in Vanuatu, covering 8,000 fishers. Donor-funded premium support was tied, and this is most interesting, to the adoption of cyclone-resistant gear and sustainable fishing practices. The uptake of this, as a consequence, tripled within a year, and the improved risk data enabled insurers to refine underwriting for coastal livelihoods. So this conditional subsidy model demonstrates how affordability incentives can drive both behavioral change and market formation. Future iterations could include blended finance approaches to transition from direct subsidies to insurer capitalization.
One of the things that really strikes me about this, Francis, it's that combination, it's that interrelationship, it seems, between the individuals on the ground. In this case, we're talking about relatively small groups of individuals in specific locations facing very niche risks, who are then, able through facilitating bodies like the World Bank to get cover that they might not otherwise have been able to find, because the global insurers around the world are not able to identify the challenges that those niche small groups of individuals are facing, or perhaps have the incentives to do it. And so bodies like the CIF and the World Bank coming together to, in effect, support those smaller groups of individuals to identify risk and find solutions is incredibly powerful, isn't it? I mean, Robbie, you've also been talking about this today, about the benefits of joint ventures.
Well, actually, funnily enough, on the agricultural side, there's a very, very good example, partly because I help them decide themselves. In China, where the farmers around Shanghai belong to a cooperative, and when they buy their seed for planting the next year, part of that cost is an insurance premium. So then the cooperative sets aside that money to buy the appropriate insurance And where that insurance cannot be met because the disaster might have been so strong in a cyclone, then the government, through the agricultural bank, will then pay the difference. And this is a perfect example as to how other countries should look at it as well, to help the smaller people. And I think we are always looking at the urbanization, but actually you can't have people living in an urban area unless they have food to eat. And so this is why it's so important that we shouldn't forget the agricultural and the fishing industries. And this is a brilliant way, as Francis was just saying earlier about fishing, you help by subsidizing, but at the same time, the people involved in the agriculture, for instance, are paying a premium as part of the cost of the seed. It's brilliant.
It's really, really clever, isn't it? And I wonder if we come full circle as we come towards the conclusion of this particular podcast to what we've discussed and how that feeds back into the work of the CIF and the extraordinary endeavour that you and mission that you are both on. So thinking about the work that you have undertaken with bodies like the World Bank and others, what do you think are the next steps? What do you think would really be a catalyst for further action in this space? What support do you need from the insurance profession to make the biggest difference and create the greatest advancements in narrowing that protection gap around the world for countries and individuals and benefiting their way of life? Robbie, maybe I'll come to you first and then Francis, I'll give you the last word.
Very kind of you to come to me first. I don't know whether I have the better answer rather than Francis, but actually what I think is interesting from our little broadcast today is this, that we speak about the developing countries, the small island states, and we think they have a problem. But actually, the same problem is shared by the donor nations themselves. And when you start looking to see how little they are really prepared or covered, it's really important that a major institution, as you rightly say, the World Bank or the IMF, brings together groups of people. Now, a COP30 wouldn't work, but actually what you should do is a regional program, and because the regions themselves will have differing issues than other parts of the world where that particular insurance would not be necessary. I find it fascinating that only now parametric triggers are really being understood, even in the European market, to help with collective disasters. What do I mean by collective disaster? It's because a whole street can be underwater. And if you have 50 houses in that street, how many of them are properly insured? How many of them have an insurance program which will actually cover flood? How many are uninsured? And how many, for all sorts of reasons, divorce, illness, death, cannot insure for some reason, don't have the right policy held up. And that's why communities need to have collectives in a way that Switzerland started in 1936, so that the private market and the local government market, I suppose, in an advanced economy, can get together and say, this is a mutual, and we will make sure the whole street looks the same as it did before the flood. We can't have 4 houses not being repaired because somebody couldn't afford to do it for a specific reason. And another reason for this is because we are now obliging for first responding groups of people like doctors and nurses, firemen, whatever, to have properties nearer conurbations like Reading. And what's happening? They're building on floodplains. Well, if you're making people live in those floodplains, you really ought to have an insurance program which covers an obvious risk which might happen every year.
Absolutely. And that's societal benefit, isn't it? I mean, that is what insurance is all about. Finding ways that individuals can come together and the risk be distributed in the most effective way is fundamental to the profession. Francis, I'll come to you for the final word. I mean, in terms of summarizing the work of the CIF and the activities that you're perhaps going to be working on over the next few months, how does this all come together for you? What are you going to be looking forward to? What are you going to be working on?
Well, I mean, there's no single point in this because there are so many points, if I can put it like that. Therefore, it is a continuum. And Robbie and I will continue talking to the government, talking to the Foreign Office, talking to all the regulatory bodies, talking to everybody we can. working with the CII, of course, very importantly, and the CII is, I know, doing a lot as well, encouraging regulators to look at insurance, to improve their communication, to improve the availability of it with all the various bodies, of which there are many. And just to give you one example here, closing the protection gap really is a top priority for the International Association of Insurance Supervisors, the IAIS, one of many regulatory bodies. And in the Philippines, for example, it's always a good example, insurance penetration was below 2% after the Natural Disaster Agency and the insurers launched a public campaign using schools. This is touching on the lack of education point, which we haven't really highlighted this, but I would just like to make this point. This public campaign using schools, radio, and local councils demonstrated how insurance complements preparedness. Understanding of insurance increased by 40% as a result of these educational programs, and enrollment in microinsurance schemes rose significantly. In India, the government subsidized 50% of premiums, including reductions for risk reduction practices for farmers who previously found insurance unaffordable, and so on and so forth. And the final point, if I may, Chris, is on this question of governmental support. And in America, for example, several states have created something called FAIR plans, which are designed to be insurers of last resort to provide basic property insurance when no other option is reasonably available. I mean, that's the general idea. But they've been very sensible about this, because what they don't want to do is crowd out commercial options by being available. So it's very much that. And if commercial options do become available, then the FAIR plan price is adjusted to the commercial price. So they're not having an unfair advantage or pulling in business they shouldn't be. So to answer your overall question, it's such a universe of activity, development, and so on that all we can do, bear in mind there's Robbie and I really, all we can do is as much as we can do every day with people we talk to, people we try and influence. Obviously, Lloyd's is one of them, but it's not the only one. The CII is doing a tremendous job, and I'm so glad the CII joined the Commonwealth. That was a really good, sensible, wonderful move. And that's encouraging the one thing we clearly do need all over the place, which is education. And Chris, you might like to perhaps say something on the education point.
Yeah, I mean, we are, as an organization, solidly behind the necessity to build understanding and awareness of both the role of insurance in a general context, but also the societal benefit that can come from insurance. I think, having not been in the profession myself, having come into the profession over the last few years, it was very easy, and I think it is very easy for individuals who don't come into contact with the insurance profession very often through their lives to be actually quite ignorant of the benefits that it can bring. And certainly, having had the opportunity to speak with both you and Robbie, Francis, and so many other fantastic professionals over the course of these last 3 years, it really does bring home the benefit, the tangible, emotional and physical benefits that insurance can bring to communities and individuals. And so it is such a powerful profession, one that really doesn't get the gravity of conversation and involvement of some governments that it might truly deserve. Well, look, it's been absolutely fascinating, Francis and Robbie, once again. Really do appreciate you coming on the podcast, and we will be back with you in the spring, I am sure, to have another follow-up conversation as well. Robbie, I know you've not been well in recent weeks. It's delightful and wonderful that you've been able to join us today. Wish you a continued speedy recovery and a lot of good rest with family and friends over the festive period. Thank you both so much.
Thank you very much. I really enjoyed participating in this particular podcast.
Yes, thank you very much, Chris. It's very valuable to all of us. Thank you.
Well, that's the end of this particular podcast. Thank you for listening. You can find more episodes on the Journal podcast, more information in the show notes and related articles on the Journal website. Please like, review and subscribe. Until next time, goodbye.